Housing is at an all-time low for the whole nation. Welcome back, everybody. Another episode, another week. So much stuff coming out this week. So much stuff. It's unbelievable, but I got you covered. This is Kenny with the brief. Let's get into it. Always, let's check inventory. Inventory, 2205. Last week we're at 2179. Pending 487, new 538. We're coming up a little bit, but the bad news is nationally, we are getting crushed. The worst, lowest ever. So inventory is terrible. We've literally got 2.5 more months and then it starts to come back down. It's not looking good. I don't know what to tell you guys, but it's not happening unless we get some serious pickup in the next weeks or months. It's just, you guys tell me. I don't know. Rates are pretty much flat week over week. Market's just hanging on there. Not much going on. As you know, the Fed's probably their last raise. We'll see. We don't know. But what's going on this week? I got to even look because there's so much economic data coming out. I might even miss some of this. So that means it's going to be volatile, maybe with rates, with the market. But overall, we've got the debt ceiling, which I've been telling you guys about for months. It's coming down to the wire here. They're going to meet this week. A bunch of drama there. So we got to watch volatility in the market. What do we got this week? We got retail sales, building permits, home starts, initial jobless claims, home builder confidence, retail sales are out, maybe more. It's a busy week. A lot of news coming out. So we'll really see retail sales. How's the consumer doing? Home starts, building permits, or is it better or worse? Home builder confidence, and all this stuff's coming out. So retail sales will be very interesting, initial jobless claims, but more importantly, the banking crisis is still looming. I'm getting calls from people that were with First Republic Bank that's going to become Chase. I've said this before. They're not sure where they're going to go. These people are getting lots of great mortgages and terms, and they're helping them out, guys that bought a lot of properties and things like this. So they're looking for alternative sources. Their funding's not there. It's going to hurt their business model. So that banking crisis definitely is baking some pain into the economy, especially these, First Republic, especially here in California, and people that bank with them and use them for their businesses, whether, commercial, residential, maybe your business lending, whatever they did, lines of credit. So definitely going to change things. I bet you a lot of people locally are going to be looking for different banks and options and opportunities. What else is going on out there is honestly, guys, it's kind of strange, right? You look on the news, you watch all the smartest people, nobody knows. They're talking about a recession. They're talking about, is the inflation coming down? They're talking about, this ceiling debt coming on here. There's just so much drama and stuff going on. And this is why I go back to is you print too much money, you went way too long. And here's the problem. This all is because a group of people let the rates go too low, put too much money in the system, let this drag on forever, and this is what you get. Low rates are not great. When asset prices go like this, it's not great. I know it's so fun there, you're making money, it's great, but on the other side, this is what we have to deal with. This is what we're left with. So I don't really like it and nobody knows what to expect. We don't know what to do moving forward, but there will be opportunity. We just don't know what it is. We just it's literally like week over week, day over day. We're just watching this stuff and that's it, guys. I mean, what else can you do, right? Rates may slowly coming down, possibly. They're just stuck. The 10 years been stuck 3.4, 3.5. The 10-year treasury, it's just sitting there. So look, we're still lending. Fannie, Freddie, FHA, VA's lending, the non-QM, the bank statements, the DSCR, all that. We're lending, helping a lot of people with cash out refis, a lot of just rate term refis, people getting out of, higher interest rate debt than they are now. A lot of purchases, a lot of people looking at investment properties, right? So there's a lot of, yes, we have interest only, we have fully amortized, we have the ARM rates, we have all this. There is options to help people out there. You got to know who to work with, but I will leave you this. Real estate, whatever you do, working with the best team is always the most important. Make sure they know what they're doing. Make sure they're educating people, and that's a passion because that means they're there to help you, and they're really spending time too outside of their business to know what's going on to help you make the best decisions for you, your family, and your business. So that's what I will leave you with. Until next week, when we get all this data, it will be interesting, but really housing inventory We would love to see you spike, but I don't think we are. And man, we're coming in June here. We're at peak, June, July, we're 5,500 last year. We're not good, but you guys have a great week. I'll see you guys soon.